Hey, Tommy from Finance with the Limbs here. Tonight, we have a special episode for you. It's the first in a new series called The Bottomline, where we discuss investing ideas and much more with a guest. Our guest tonight is an expert on Chinese companies, a long-time Alibaba bull, and a self-proclaimed clown on YouTube. Chi Keng, welcome to the show.
Hey, thanks, Tommy. My name is Chi Keng. I do run a small YouTube channel, and yeah, I do proclaim myself as a clown on the internet because I think a lot of things online should not be taken too seriously, and you should just take whatever by the pinch of the salt. But that's it. Of course, I don't proclaim myself as any forms of expert. I think people just make that connection, or people just because I say something and reiterate it on a consistent basis, then people think that I'm an expert. But of course, I'm still learning. But yeah, thanks, Tommy, for that great introduction.
How do you reconcile holding the line of financial advice? Because that's one thing I notice. It's usually a huge headache for YouTubers. At which point do people start taking you too seriously and just double down when you seem like you're really confident on something? They just almost go all in. How do you reconcile that tension?
Right, I understand. I think actually I did search it out. I think recently there was a video that was posted by the Plain Bagel. I think he's also quite a huge finance sort of YouTuber in this YouTube space. And he actually did discuss with one of his law friends, asking whether this quote-unquote disclaimer of not financial advice actually abstain you from all the different legal proceedings and stuff. But apparently it does not. So I think at least on this online medium, personally, I do believe that there are a lot of people that take things extremely seriously and they go all out and they really sought advice on an online medium. I think not only on YouTube, people go onto forums like Hardware Zone, or even a lot of all those investing note, for example, and then people come in as a community and then they start discussing about finance picks, personal finance, etc. The problem with this is, I personally feel, of course, I believe that the onus is always on the listener or on the people that participate in this kind of activity. Because that's it. You can't really control what people have to say, and people have what they can discuss, or whether are their claims even legitimate, and what's the veracity of all the different arguments that they put forth. So that said, you have to exercise a certain degree of critical thinking, a certain degree of researching on your own, and that's something that I cannot control. So at least personally, on a personal level, I try to do as much research as I can. Of course, I fumble from time to time. I do put out, I won't say dishonest information, but really sometimes the benefit of the doubt that I might have misread a certain paragraph. I might have misseen or mislooked some of the numbers. So that said, of course, I'm not abstain from, and I'm not perfect. So to human is error. If I'm not wrong, that's the proverb. But I really do encourage people, especially when you're trying to take advice from people online. Please know everyone has their own agenda, and a lot of us are all biased in a certain degree. So just know that and protect yourself. I think that's the most I can tell to all the different audiences out there.
Yeah, so this is I guess a note to all content creators, not just ourselves, that we have to be sincere and take as much responsibility, at least as with all the information you have at the time where you create something that looks like investment advice, but it is not, of course.
Yeah.
Okay, I want to start off with Alibaba, because that's what you are most likely known for. Surprise. So, on Alibaba's sort of numbers, right? How do you reconcile the different accounting practices between the US and Chinese companies? So personally, I'm not a accounting expert, and I've not studied finance at all. So, but from what I understand, people are usually a bit more shaky when it's not GAAP earnings.
Yes.
So how do you as an investor yourself reconcile that, and how do you break that in terms of discounted risk, let's say over 5 years? Yeah.
Understand. So personally, I think on that question, it's a valid concern. I think many people do have that concern. I'm currently doing a finance degree. I'm doing an accounting degree as well. I don't think I'm the most qualified because I have not graduated, and I don't want to tarnish my own university's reputation. But all else being said, as as an accounting undergraduate or as an accounting major student, I think it's definitely concerning to many investors, specifically about this entire Chinese-US tension, how people are afraid of fraudulent numbers, etc. And from the way I see it, it's something that probably can never be reconciled. I think to give it to you straight, if I were to answer it, simply put, it cannot be reconciled because let's not talk about the Chinese and US. Even Singapore's accounting standard and the US accounting standard has a fair bit of differences. Of course, there is the international standard, and then there are the nuances in your own localized context.
Right.
So in that sense, there will never be a perfect standard. So what the international community try to do is they try to set the baseline. But now the issue is, what if we have contentions on the baseline? Then how do we go about trying to absolve those differences? So in this case, I think personally, especially being invested and looking through all the financial data and financial numbers of Chinese equity specifically. So if your Alibaba, your Tencent, your Baidu, largely speaking, we would tend to believe a lot of their numbers more than compared to, let's say, a random small boutique company in China. Maybe they call themselves Zhejiang Tourism or Zhejiang Mummy's Bakery. I think in comparison, if you were to look at international companies, companies with huge exposure, you tend to trust the numbers a little bit more. But that said, what happens if they themselves are also fraud? So in those cases, you have people like Luckin Coffee, for example. I would just like to remind everyone that accounting fraud is not China don't run a monopoly on accounting frauds. I think frauds happen at every single part of the globe. So there are always issues in different countries, and Enron is a classic example on how US is also at the mercy of this kind of the different companies or management trying to manipulate earnings and trying to defraud different shareholders or consumers, etc. So in this case, I think it's always a learning process for all the different companies out there. US is learning, China is learning, but I believe China has a lot more to learn and a lot more to catch up because they're quite late to this entire capitalistic game. But I'd just like to remind everyone that, hey, China, it's not a problem that only plagues China. That's the first point. And on the second point, people are also afraid that, hey, what if they are reporting bad earnings or they try to they have malicious intent? Then you start looking at the history of the company. You start looking at how the team has executed. And if the company is here for over 10, 20, 30 years, the business is ever expanding, more and more people are using their products, then maybe you might want to think again on whether are there any merits to people constantly shilling out and saying that, oh, all the numbers out from China is all fake. I think to the extent that the credibility of the Chinese government now is people don't even trust their GDP numbers anymore. So that's definitely a topic for another day. But in terms of trying to, I would only say you have to take your own risks, and this risk is prevalent in every single company, but the risk might be higher in China specifically. So it really depends on your profile and how you want to tackle this problem yourself on a personal level.
Right, yeah.
Yeah.
So I agree with almost basically everything you said. And one thing I find myself struggling with is like trying to reconcile how do you invest in a company that I cannot get my hands on and like see other people using. So those are the ones that usually I tend to stay away from. So like at least Alibaba, right? There's Lazada. There's stuff you can test out. If it's a scam, there are many eyeballs on it, and then you'll be like one of the biggest scams of all time if it turns out to be true. So there's a little bit of assurance there at least. Yeah. So my follow-up question would be like, does the CCP care for the success of some of the companies that, nowadays we like to talk about homecoming, they come back, common prosperity and whatnot. So do they still care about, say, DT, Luckin Coffee, and other public companies that have so-called like abandoned their people, gone out? Yeah. I
think personally, everything is personal opinion, of course. Personally, I feel like all these different private enterprises or arms of different enterprises, they are a form of means to an end, and that end is quite clear, to bring prosperity to the people, to make China great again. So there's this interesting rhetoric by Trump, by ex-president Trump. He wants to make America great again. Personally, I think America is already great. They have nothing to be great again. They are still great, like they are the greatest country, in my own opinion. China, on the other hand, I think they suffered a huge amount of humiliation, at least for the last 50, 100, 200 years. They were at the back of a lot of all the different more westernized countries. And if I'm not wrong, I think at least in the olden times, they do make up around 30 to 35% of the world GDP. That was in the early, I don't know, in the BCs or whatever. But that said, you can see that, or you can at least observe that, hey, China has been deteriorating at least in the last 50 years. The last 50 years, they have been deteriorating. They have been essentially exploited, if I can use that word. So in this case, I think it's really the revitalization and really the ambition to come back greater and to come back stronger. So if you were to look at all these different private enterprises or different companies, there are all just methods to try to help alleviate and to help quicken that process. And in order for you to be a great power, in order for you to be great again, you have to have all these credible companies, people that are supporting of your products, of your services, people that can look up to, and people that have companies that people want to work in and to contribute back to the company. Yeah. So in that case, I think at least in the last 10 years, China did put on more and more emphasis in trying to make a lot of their companies or enterprises a lot more credible. I think if you were to study back in the 2000s, they couldn't care less. As long as there's money, you generate revenue, I'm gonna do it. But then they start to slowly realize that, hey, maybe credibility is one thing. Maybe trust also is worth something. And then they start reevaluating their position again, and they start looking into, hey, is there really worth in trying to essentially make the international community look into China again, and if they want to invest. And of course, the credibility is just one arm of the entire argument. On the other arms you have things like international fund flow. You have things like whether investors are the ones that hold a huge ton of money. So are they even comfortable putting money into your economy to help you drive your economy, drive your GDP, etc. So all these are different facades of the same equation. And I think that being a politician is an extremely tiring job. Being a government is an extremely tiring job. So in that essence, there are many levers that the government is trying to weigh now. And I from as far as I can tell, gaining credibility is just it will be a process. It's a work in progress, but I don't think that's very high up in the priority list, because there are a lot of things that they are concerned about right now. There are more things that are a lot more urgent. Right. So to me, we can take the next 10, 20 years to appreciate how they try to internationalize the names, the big brand names, how they try to gain more international market share. But I personally don't think that it's a priority thus far in today's context, at least.
Right. And do you think that would cause more downward pressure, basically? Because if it's not a priority, like hedge funds and institutional investors will not sniff out that, there's a sweet spot of...
Right. Actually, I totally do agree on that entire rhetoric, which is also why I think there are friends, people in the community, and some of my viewers asking me, why are you catching that falling knife? It's going to be a long wait ahead. Why do you want to get invested so early on? You can start playing around other markets first, and then when there might be signs of reversal, maybe you can go into the Chinese market again. I think to that, I only probably have like 3 responses. Number 1, I think there's this Chinese saying, I will help translate later. So there's this Chinese saying, 为什么杀头的生意有人做，而亏本的生意没人做? Essentially what it means is, why are there businesses that people are risking their lives to do, but there are still people that are willing to do it. But whenever businesses are losing money or it's a guaranteed loss, nobody's willing to touch it with a 10-foot pole. So in this case, sooner or later, hedge funds are going to rotate back in. I think to me, looking at it, it's a cyclical movement. Hedge funds moving in and out of Chinese big tech or even Chinese companies specifically. Let's just look back in 2015. If I were to just pull out a few numbers, let's take Alibaba for example as well. In 2015, their enterprise value to the revenue, enterprise value to last 12-month revenue was around 13.6, and in today it's 2.45. Enterprise value to free cash flow in 2015 was 25 times. Today it's 13 times. So don't tell me that in 2015 they had more trust in China than compared to today. I think a lot of all these risks that are involved, it's the same. China is still under CCP. It's still under Chairman Xi. In 2015 it's Chairman Xi. In 2022 it's still Chairman Xi. And he's still going to be elected for life again. Barring the fact that if he's assassinated, of course. But anyway, if we are looking at it in this lens, you can really see that it's a cyclical movement. Hedge funds will always be searching in search of that next big thing or the opportunity to earn money and to generate alpha. So in this case, I'm not really worried because sooner or later the movements back into Chinese big tech, they will fall in favor again. And there's this very interesting narrative that says a lot of people like to believe that price action is driven by fundamental changes. I personally think that it's the price patterns that dictate the narrative. So if the company keeps falling, it's a bad company. You look at it, margins is shrinking or revenue is decreasing, but nobody gives any disregard. They disregard all the different macroeconomic factors, some of the explanations, etc. So that's on one. On point number two, I fundamentally believe that because of course, some of the concerns are legitimate, by the way. So companies or the government is putting on pressures. People are it's for the greater good. There's this common prosperity push. All I totally agree. But then we come to ask ourselves as shareholders, what do we want? We want sustainable long-term growth, right? But the problem is a lot of people like to squeeze the short-term profits. They like a hit and run. They like to see profits jump 100% year on year. You grow 50% CAGR for the next 5 years. But are these sustainable or not? We don't really know. I think that's a question that we say that, maybe you ask 5 years later. Let's not think about it now. If you are able to derive revenue and profits now, I want to take it now. And that's the issue. If you're investing in China, you have to adopt an extremely long-term view. It has to be sustainable because like Ant Group, for example, Ant is growing enormously. The growth was tremendous. The amount of value that they provide was also tremendous, but it also brings in a huge amount of systemic risk, which is concerning the government. If I am Chairman C today, for example, if you can constantly just loan out loans and disperse loans, and you take only 3% of the take, then or you only risk 3% having skin in that game, then I really highly doubt the amount of risk that you actually care when you are doing all the processing. That's on point number two. We want sustainable long-term growth. And point number three, really to answer about this catching the falling knife thing, I think there's always a classic explanation. Time in the market always beats timing the market. I know I'm a bad market timer. Every time I tried to time the market, I sold Apple at 140, 150, and I thought I was a genius. And then look at where Apple is today. So in this case, if you buy into companies or you buy into specific stocks, at the end of the day, if of course this is advice only to people. No, I wouldn't say advice. Of course, I cannot dig a hole for myself. But if you were to look at it, if you have an extremely huge time horizon, if it's extremely long, and if you're in the accumulation phase, I don't see why you are timing that few tens of dollars of difference, and then you say that maybe in 10 years I'm able to expound my money more. That's a very dangerous mindset to begin with. That's one. And on number two, I know that, and I'm ignorant enough to know. I'm ignorant. I know that I'm ignorant to be able to time the bottom. So in this case, I look into a business. I like the fundamentals. I like the valuation. I buy. That's as simple as it is. And if it's down 30%, 40%, 50%, I ask myself, I was happy when Alibaba was at 170, 180. It's at $100 now. Am I supposed to be even happier, or am I supposed to start getting worried about my investment? I think that's the primary difference between trying to time the market and catching the falling knife or whatnot. So yeah,
I agree with your ideas. So like for me, I'm personally very bad at timing the market as well. Like personal experience of selling Tesla too early, selling TSMC too early. So those are the two big examples I can think of off the top, that not taking a long-term view actually hurt me more than like trying to be clever. So engineers would call this like over engineering the So
I also do think that especially people as smart as you, or as smart as a lot of people that actually come onto YouTube to watch investing advice, they always mix things up. So in economics 101, and maybe in high school economics, they teach you opportunity cost, right? Whoa, so you deploy your capital here and then look at the amount of opportunity you lost. And then it's always hindsight bias. Yeah. They always like to compare. Look at the amount of money you lost in Alibaba. What if you deployed the capital in Tesla, for example? Look at how much money, what's the delta difference that you're experiencing? All these are hindsight. It's 2020. Nobody knows what's going to happen. And you just buy based on your own risk profile and how you're going to construct your own portfolio. We can't really take into account, in this case, if Alibaba were to spring up 300 tomorrow, so who's the genius one then? Because there is always a timeline in how you try to compare for results, right?
Yeah.
And that's a very dangerous thing to do, because you'll always be in the rabbit hole trying to chase let's evaluate, hey, is this investment a good one? What if tomorrow suddenly a 20% return year on year investment starts popping up and it's
exactly
sent to your table? Are you going to sell out and take that opportunity?
Yeah, and when people talk about opportunity cost, they almost never talk about how do you get the data at the right time so that you can even make that, to know what you missed out on. That itself, it's perhaps just as big as the opportunity cost. It's also a cost.
Right.
Cost to your standoff. You have to sacrifice things in your life, right? To be always so ahead of the game. You have to know how the OTC markets work. You have to know how the hedge funds are thinking. All of that.
Right.
To be a trader, which is why more people are long-term investors, I think, statistically.
Right.
Yeah, it's just harder to be a trader in general. Nothing wrong with it. Those people are have their own thing going on. We don't know about it, so we tend to stay away.
Right. The funny thing is, a lot of people like to think that they're long-term investors, but if you look at the activities in their trading account, I think a lot of us are not, because we are easily swayed by all the emotions, market-driven sentiments. Hey, it might be a lot expensive now, let's take a little bit of profits off the table, and then they don't stick to their gun. But if you were to look at goats, like Warren Buffett, he helped Coca-Cola all the freaking way. He just accumulates and accumulates and accumulates and accumulates, and that's the kind of investment temperament that I think people always strive to achieve, but always
get distracted
have
along
that
the way.
shortfall.
Right? Get distracted along the way. That I struggle with that as well. And of course, it's a learning process, and I aim to get enough conviction on my positions that I almost see myself as a business owner.
Right.
And that's how I was able to just double down when the market is, afraid.
Yes.
Okay, so a follow-up question would be, how do you look at the qualitative features of Alibaba? What aspects of their management impresses you, and how do you see their competitive advantage? Do you think that they can maintain their market share moving forward?
Right. Okay. So maybe it's two parts, right? I'll answer about the qualitative aspects of the management team first. So there's this saying about of course, for those of you who do not know, Alibaba is actually founded by Jack Ma and a few of his business partners. I think there's this internet discussion of Sipa Lohan, which is he and his team of experts and team of generals that led Alibaba to where they are today. So in terms of execution wise, I think you really have to give it to them. At least in the Chinese tech sector, in the US you have the FANGs, right? Your Facebook, Amazon, Apple, Google, etc. And then in China you have your BET, which is your Baidu, Tencent, and Alibaba. So in this case, you can see that a lot of the competition or a lot of discussions surrounding many of the industries, like really a ton of industries, social media, e-commerce, Internet of Things, etc., etc. The list goes on. It's dominated by the three of them. But of course, recently there are new pop-ups like Meituan, Kuaishou, ByteDance. All these start popping up and start joining into the scene as well. But at least for the last 20 years, if I were to look at how the management team of Alibaba have executed, you really cannot not give it to them. So let me give you an example. They have four main arms in Alibaba: their e-commerce arm, their logistics arm, their finance arm, and their cloud computing arm. Out of the four, they are dominant in three. By dominant, I mean they win Tencent, they win Baidu, they win Huawei. All these, Huawei is a state-owned enterprise, by the way. It's controlled by the government, or there are stakes by the government. And Alibaba still managed to come out on top of all this. E-commerce, they hold 50%. The next closest competitor, JD, hold 20-odd%. In cloud, they hold 40%, or 35 to 38%. The next closest competitor, Tencent, at around 20-odd% as well. And in finance, at least in the mobile payment arm, they own 50-odd%. Tencent's WeChat Pay, they hold around 30 to 40%. So in this case, if you were to look at it, you really can't say that they can't execute. Because in this instance, they prove to you that, hey, out of four, they dominate three. In terms of the logistics arm, I don't really have the numbers crunched at the back of my head, but you can tell that they are of a certain size and caliber. If not, they will not be able to serve such a huge market in China specifically. So I wouldn't make the claim that they are the best, but at least I know out of the four, they're the best in three. That's the first part. Then of course, I have to play devil's advocate here. they attempted to try to disrupt the social media industry and take on WeChat as well, and they failed. So in this case, they only got, currently, if I'm not wrong, a 20% stake in Weibo, which is China's version of Twitter. But in this case, they tried to build an app on their own, and they failed to gain market share. They failed to compete. So that was also a kind of a blemish on their papers. Doesn't mean that every single project that they take or every single initiative that they take, they manage to execute it well. So this is the kind of execution risk that how you are looking and how you are positioned to look at Alibaba. So I'll leave it up to you to decide whether the management is able to continue executing. So that's the first part. And on the second part, now a lot of people like to talk about this might be the Yahoo moment of Alibaba, right? Because they are slowly losing competitive advantage. They are slowly losing market share. The e-commerce arm facing massive amount of headwind, not only from JD and Pinduoduo. Now ByteDance wants to come in, Kuaishou wants to come in. Every single Huya, Douyu also wants to come in. All the live streaming platforms want to come in. Then even in the Ant Group, for example, now digital renminbi is gonna kill and financial Ant Group, for example, because they won't use mobile payments anymore. I believe at least in a lot of all this narrative building, right, there are always kernels of truth. So maybe in the .com bubble, right, everybody thought internet was the next big thing, and it is. Internet was the next big thing. But if you invest in something like pets.com, for example, it's nowhere to be seen today. And even for Amazon, you invested in $100, it dropped 90% to $3. But if you held true, Amazon is a few $1,000 today a share. So in this case, a lot of all this narrative building and a lot of all these stories, right? Essentially Alibaba kind of lost its story, especially in the crackdown. Right. At the peak of the crackdown, a lot of people are saying that, the Chinese government is going to kill them, competition is too strong, they're not innovating fast enough, the list goes on, and I don't want to reiterate the points. But that said, then, as an investor, you will then have to make that qualitative judgment yourself. Are they able to come out even stronger from this? That's the first question you have to ask yourself. Number two, a lot of all the product offerings, especially when you're a consumer of all those Lazada, Taobao, some of you in China, you use all the different apps, Ele.me, Xianyu, etc. These are real products and you use it every day and they're generating revenue every day. And you have a whole hard look at it and you think about it. Are you stick to this product? Do you have loyalty to the product itself? Or do you think that it's easily replaceable? And that's only a judgment that you can make on your own. So like Facebook, people say that, hey, Facebook might be also experiencing a Yahoo moment. So everybody seems to be experiencing a Yahoo moment that they might be disrupted by everyone, right? So that's a lot on the story and how they lost their story over time. So in this case, you have to make a lot of the different judgment on your own, onto thinking whether you believe that the company is able to come back and come out stronger. And on the last point on whether in terms of competitive advantage and in finance we like to call it economic mode, right? I would like to echo what Charlie Munger actually said in his latest Daily Journals interview. He actually did compare Alibaba with Google and which is Alphabet, their parent company, and Apple. So I personally also have to agree to that. If you're to compare the business model based on merits itself, of course, Alibaba is not as entrenched as Apple or as Google. I think the funny thing is, it's extremely hard to find any other companies that can come and can rival Google, for example. Even Jeff Bezos said that Google is a mountain. It can be conquered, but it can't be moved. So in that sense, there are really no close competition to all these different companies. That said though, does not mean that they would be here 10, 20, 30 years ago. Nobody knows. The world is fluid. And that's exactly how you exploit opportunities. But I'd like to acknowledge the fact that, hey, Alibaba is definitely experiencing a good amount of competition, a good amount of headwind thus far. And then you will have to see that because in this transition phase, you know that we are kind of at the maturing stage of the curve. So it really then depends on whether you're betting on the next stage of the curve, where for Facebook, it's the metaverse, and for Alibaba, in my own opinion, it's the international commerce arm and it's cloud computing arm as well. So that's just my own general gist about the management team by and large, and also how Alibaba's trying to enhance and trying to continuously provide value to the marketplace.